Let's actually talk about something important today. Let's actually talk about one thing that helps us to make money in the market and one thing that also helps us to lose money in the market. One sole reason the markets are working in the first place, and one sole reason they will continue to work only until we will not be replaced by robots and AI playing in the marketplace. Let's talk about human psychology. Let's talk about what helps us to make money in the market, helps us to lose money in the market, and why it is important. I can definitely say that most of you, me including, we are making these mistakes. We are losing 100x's, 1000x's opportunities. We are selling too early. We are buying wrong, hyped up, scammy token instead of actually putting our money into a gem that would be doing 100x's in the full bull run. You will not hear a list of tokens in these videos. You will not hear 100x coins that are going to pump moving forward in this crazy narrative. But you will hear something more important, something that would help you to get an edge on the marketplace, that will help you to outperform other players on the marketplace as well. Human psychology is the only thing why we can make money on the markets and why markets actually work in the first place. It's very important to at least understand the basics, to understand where you are, what you should be doing and what you should not be doing. And we will be diving deep into this topic specifically in connection to crypto markets, because this is pretty much the only thing that interests us on this channel, right? So let's move forward. I will tell you how to minimize mistakes when you are buying something on the hype, when you are missing something, when is actually a good time to buy the tokens, how to spot asymmetric opportunities on the marketplace, how to actually be able to play this game better than other players on the marketplace, therefore capitalizing in the process as well. Like this video, subscribe to this channel, and let's move on. Before we start, I would like to remind that I'm giving away $300 in each video. In order to be eligible for giveaway, you have to be my referral on BitGet exchange, you have to complete KYC, and you have to deposit at least $100. Then you can go into my Discord, submit Google form, and after that you would be eligible for giveaway and you would be also added to my private VIP channel. Let's actually start. Mastering market psychology. Very, very important topic. The only most important thing, it doesn't even influence much what type of token you're actually talking about, what type of coin, what type of narrative. When you understand these things, when you understand how the whole thing works, it doesn't matter for you what type of the token, what type of the coin, you would still understand whether or not it is a great time to buy currently. Should you be waiting, and what type of events have a high chance of occurrence in connection to this token? You would be able to find your great entry, you would be able to form a thesis, and you would also be able to make a decision on selling at the right time. All of this can be done based only on human psychology in crypto market. And we have something very, very interesting in crypto market than we have in others. The fact that entry point is very, very low. The fact that a lot of people who don't know anything about investing can actually access this market. People who are putting the money into stocks, they are more risk averse, they care more about risks, they would probably be researching on the companies, checking out some books, checking out some information. Here we have investors that are purely driven by their emotions. Players that understand these things and understand where actually are these people that buy or sell only based on the emotions, they are capitalizing the most. We also need to understand where these players are, because it's definitely easier to win on the marketplace if you're playing with someone that doesn't know a lot of stuff, right? Point number one, protecting 20 to 50% downside, risking 1000+% upside. This is something very, very interesting, and this is something actually connected with the recent correction as well. Right now we're in correction, we might be going lower, we might be going higher. In general, no one knows what's going to happen. And I see tokens like Arbitrum going down in price, which basically means that people are selling Arbitrum. And most likely a lot of players, a lot of holders of Arbitrum, a lot of players on the marketplace, they actually do understand that they might have a feeling to a certain extent that we are not yet at the full top of the market. We should be having a bull run moving forward as well. Now, again, no one knows when it's going to happen. But at the same time, they're trying to protect 20, 30, 40% downside, risking 1,000 plus % upside. So crazy to me, see this type of behavior. You need to understand who you are in the first place. Me personally, I understand I'm not the best trader. Most likely, I won't be able to sell at the tops and buy back 30% lower and increase the amount of tokens that I have and do it multiple times in a row, because I do understand that in one of these times market will just surge up, leaving me out of my bag. It doesn't work this way. And once you would think that you just mastered this type of skill, that you are very good at selling local tops and buying back lower, it will just surge up like crazy and you will heavily underperform if in comparison you would just be holding your tokens. Now, you know, I was publicly entering Arbitrum long at $2 recently. Bruv, it didn't age well. It definitely didn't age well. At the same time, I was only entering with 3x leverage. My liquidation point is around 1.34 and I don't expect for us to go that low. And even if we will, I would just be adding margin, because I do expect we still have a lot of bullish events for Arbitrum and essentially for Ethereum and Ethereum layer 2s as well. But we are not talking about Arbitrum here. It's very important. You need to have a long-term view. You need to understand your upside. You need to understand your downside as well. I did not sell any token in my bobo bag. Zero. It pretty much corrected 50% from the tops. And you might say, yeah, I could have sold at the top. It was obvious because everyone was talking about it. It was mentioned on Crypto Banter, right? It doesn't work this way. You cannot always sell at the top and then be able to buy back lower. It just simply does not work this way. And upside, risking this upside that can be missed if you would actually be doing something like that is so crazy. You might have the strategy where you are minimizing the risks of your upside. For example, at the local tops, when you think that we are at the local tops, you are selling 20% of the bag. And then you are re-entering for this 20% somewhere lower. It's also quite hard to do if you're doing it multiple times on multiple local tops, because you might be missing one from which the token would just surge like crazy. And all your increases in the bags over time, they would still be less than that 20% that you just sold. Therefore, you heavily downperformed in comparison with you just doing nothing. Crazy thing, if you are selling 100% of your bag and waiting to rebuy, that's pretty much protecting 20, 30, 40% downside and risking 1,000% in upside, in token surging up. These things, they are very important. It's very important to understand. You need to understand where you have the odds favored in your side, and you need to play the type of scenarios where you're likely more to win. Even if you will be losing short term, long term, your upside is way larger than trying constantly to protect 20, 30, 40% downside. It simply does not make much sense. Let me actually provide you with an example on some type of boomer stocks. Crypto for boomers, right? So we had this local top in 2020, right? In February. And some people, they were basically buying here. And they thought that they're actually very nice investors because they sold here. So they made like how much? 4x on the money in stock market in 1 year. That's just crazy. It was a peak of COVID bull run. So crazy. They never seen 4x in this short time frame. They sold, then it went down. So they felt alright. They felt good, right? And moving forward, Tesla stock pretty much reached $400. Therefore, from their 17 or 13 bucks entry, they will be making at least 20x's in stock market. It's not crypto. It's 20x's pretty much in 2 years. These are just crazy, crazy numbers. And people were selling on each dip, right here, right here, right here. And I can definitely say that a lot of them, they did not re-enter. They thought, all right, I'm fine, I'm doing well, we'll probably see a correction now, we're entering a recession and things like that. What they were trying to do, they were trying to protect their downside because they had some profits, they thought they've done pretty nicely, therefore they should be selling. And I was basically showing you a piece of stock, Tesla, that was doing 20x in 2 years. Not speaking about crypto, where tokens that can do 20x in 2 days, in 2 months, in 4 months. This is just crazy type of upside and trying to protect your 20% downside, even 70% downside. I was sitting in 70% deep in boba. It didn't feel great. And right now, the only issue that I have is that I did not DC8 in at that levels. But we will talk about regret in this video as well. I hope this first part makes sense. Just focus on your upside. Neglect your downside. Upside is way, way larger than the downside. Moving forward, point number 2. Sell outperformance, buy into down performance. That's something that a lot of people are doing, and that's something, to be honest, I was recently doing as well. I took my initials out of boba, which is nice because psychologically I had to do that to be alright with holding the position as well. I took some money out of Snibu. I took some profits out of pepe as well, and currently it kind of feels alright because I do understand that we are on the correction, so currently it's probably fine, but I think on the long enough time frame I might actually be regretting these actions. And the main reason for that is because if something showed you already that it is a winner, it is outperforming the marketplace, which means that people are interested in the token, it often signalizes that this thing will continue to surge up. It will continue to go higher. What experienced players on the marketplace are doing? They're actually looking to increase the positions on their winners this early in the cycle. I can't say we are very, very early at this stage. I would say we entered second half of the bull market, but a very, very interesting thing is that most of the gains are actually being made closer to the end of the bull market because things are going parabolic closer to the end of the bull market. That's why this game is actually so hard, because we all have our dicks in the mouth of the turtle and we need to hold it as long as we can before the snap to make the largest amount of money. It's very hard. Let's actually check out something like boba. What are the most experienced players in the marketplace would be doing? We were at this dip, right? We were just sitting there, nothing was happening, we pumped. Then we saw a dip. Experienced players on the marketplace, whales, they will be buying this dip because they would be looking to acquire a larger position in boba because they were holding the token, they understood that it's moving, it's performing to a certain extent. They would want to increase their position because they just got more conviction that this thing would be moving forward. Therefore, with more conviction, they are putting more money into this thing as well. Then we see pump and a correction. Probably some of them, I definitely know that they were adding on this correction as well. We see the pump, small corrections, consolidations, pump, and a correction after that. Whales were definitely buying more at this stage because they understood that this is something that is moving already, this is showing some traction. Therefore, it should actually continue to show traction in the process. Boom, we have this surge, correction again. Experienced players, they were not taking profits because they understand the stage of the market they're in. They understand how many people are still neglecting this token, how many people don't know, how many people don't understand the connection to pepe at this stage. The token is surging up, correction. They were buying here as well, correction, buying here as well. Went from here to this correction, buying here as well. Who do you think was actually buying here? There were whales. They didn't know anything about boba at these levels, right? They were not buying in the summer. They were not here in the summer. They just saw, all right, we have Ethereum ETF, we have Memecoin surging, we have a correction on this thing. I researched this thing, it has connection to pepe. It's original 4chan meme. It actually been used on Wall Street, and guys on Wall Street, they're actually saying boba when stocks are going down or when someone is getting liquidated on the loan, right? And they are entering here again because they do understand They do understand from their end that this thing moves, this thing performs, therefore it should be doing quite well. And interesting thing that some of these whales, they could have acquired larger positions than people that were confident here, buying here, but they are not DCAing in at these levels. I'm one of them. We surging up, correction. Definitely. Whales, we were buying here. Experienced players on the marketplace, they were buying here. Correction again, correction. And I do think we have a pretty interesting change of hands happening at this stage. Bobo pretty much already proved itself. It reached 120 million market cap at the peak of the recent local top meme season. We have Ethereum ETF. We have Ethereum surging up. Ethereum did not even reach all-time highs at this stage. Crazy names are actually talking about Bobo at this stage. People who were underexposed but have money, they are buying bags of weak hands that were entering right here because it's too risky for them to be losing their profit at this stage. They're just too afraid to be losing their profit from this token. And it's not about Bobo. It's pretty much specifically about any token. This is the behavior that whales replicate. I was watching after multiple of them. They replicate this most of the time. If they buy a token at this stage of the cycle, they do understand what stage of the cycle they are in. If the token surges up, therefore it proves the thesis. It proves that their conviction that they had initially, that they formed a thesis, actually is being recognized by players down the chain as well. They are increasing their positions on correction because they do understand that if this thing starts to pump, it will definitely continue to pump as well. And they are gradually increasing their upside. And it's very, very interesting. Whale can do 100K from $2,000 initial position. And if he believes in the token, if he thinks that thesis is great, and if he thinks that this thing would continue to move forward, he might still be buying into this thing moving up as well. Because he still understands that there are multiple axes left, and money that he's putting into the token at this stage, they will still be multiplying. Because it's better to put your money into a winner, into something that already proved to yourself and to the marketplace that most likely it will be moving higher, than pretty much trying to take profits out of the winner and put into loser something that did not move yet but should be moving forward. Very, very important mind frame and very, very important part of this game as well. Moving forward, point number 3, not thinking about second and third order of consequences, neglecting asymmetric upside and downside. Very, very interesting point by itself as well. When you're buying something at the top, when you're buying something that each and every person in the marketplace is screaming, it's getting pushed on Twitter, already, what type of upside you actually have left? Who are these people that didn't hear about the token yet? Maybe audience on YouTube? You would be planning to use them as your exit liquidity? Is there enough people that you would actually be able to use them as exit liquidity? How many X's players who were able to get early have already? And how many X's they will have once you would get your 2X to take your initials out, right? Asymmetric upside is only present on the things that no one talks about at this stage. Asymmetric downside present on the things when everyone knows about them and everyone already talks about them. On Twitter, on YouTube, everyone is speaking how great this thing is. So the sentiment is very, very bullish. These type of things, they're usually not a great investment. In general, it's quite interesting. If you are buying when you have the most fear and when it's the most uncomfortable thing to actually buy, you would generally be the most successful. And if you are selling when definitely it's very, very hard to sell, when everyone is screaming we're going higher and up, you would also be very, very successful in this game. Very, very interesting. Second and third order of consequences. When you're buying into the token, you would want to outline mentally, create a mind frame. What will happen next and why you're buying into this thing, why this thing will be surging up. I'm buying into a meme on AVAX. The main reason for that is because I assume that AVAX should be doing quite well soon because of the reason of Solana surging up, and Solana liquidity should be surging into AVAX because this is what happened back in November and December. And at the same time, this token follows memeverse of the largest meme of this cycle, new largest meme. I am buying into meme token on Blast because Blast is already number 9 total value lock chain. Not a lot of people actually know about this. A lot of people are saying that it's dead. We should have the airdrop, which should actually provide a bunch of liquidity on Blast. And on top of that, it's also from the memeverse of the largest meme on the market right now. You should be forming a thesis with second and third order of consequences. And if this thesis is strong, if you think that a lot of people over time, they don't understand this thesis currently, but over time they would most likely be forming the same thesis. And over time, most likely it would be making sense for them to enter as well. As soon as more and more people would be entering and understanding this thesis, you would want to be exiting your position. Because if everyone understands something, if everyone sees this as a great thing, then your upside is limited. Your asymmetric upside is gone. What you have currently is asymmetric downside only. Very, very important, and you probably can make some analogies with bread and base chain as well. Moving forward. Buy when dead, sell when alive and hyped. I recently received a comment on my Andy buy, Andy on Blast. And the guy said that Andy has no volume and Blast has no volume, the token and chain is dead. Why you are buying there? Do you think it would be better to buy once Andy is alive with a bunch of volume and there are a bunch of people on Blast? Your upside in this case would be 0. When there is a volume on Andy, when there is a volume on Blast, it does not have asymmetric upside anymore. It probably has way larger market cap than it would have currently. I was buying into bobo when bobo was dead. People were making fun of me for buying picture of the bear in the bear market. Meme on Ethereum. Ethereum is dead. You remember? Ethereum was dead for the second half of 2023. Fully. It was all about Solana. Ethereum was dead. I was buying into this thing because I like things when they are dead. And I was even saying it in my previous videos. 2 months ago, 3 months ago. I like when things are dead. Obviously, if I have a strong thesis on these things, and if I do understand that my thesis would be adopted by a larger amount of people into the marketplace, that would also serve as my exit liquidity at the same time. Sometimes you're wrong, sometimes you're right. But when you're right and when your thesis is great, you're making the bank. Obviously, if you're following all the other things as well. Because if your thesis was great, but you just got a 3x and you exited fully at this stage of the market, and you want to buy back lower, and the token just went up like crazy, I believe there are a bunch of people that exited bobo at 15 million market cap, 20 million market cap, because we're not going to search higher, right? Nothing else is going to be happening for the token. Or maybe there were people that were exiting in 20 million market cap. I would just sell 50%, 60% of the token and I will be re-enter lower. And they were never able to re-enter lower, significantly decreasing their position, significantly outperforming the case where someone would just kill them, they will be dead, and their portfolio will be doing way, way better if they would essentially stay alive. It's quite funny. It's actually quite funny that best investors are dead people. Buying when dead and selling when hyped is all about understanding your asymmetric upside. When it's hyped, your upside is limited. Who are the people that are going to buy into something when it's hyped already? And if you're buying something that is dead, your upside is unlimited. Obviously, you would have an issue that you would have to wait for some time, most likely. In some cases, the market might just not care about your thesis and things that you formed in your mind and things that you think would essentially be happening. We are all playing this game. We need to play it right, but when we win, it pays out very, very well. I was sitting with my bobo bag for 8 months. I do think that in case with Andy, I might be sitting for 2 to 3 months. And then it would be very, very interesting what would actually be happening on Blast chain and how it actually will perform eventually. Last but not least, Fuck the regret, shut the fuck up and approve. This is something I want to say to myself about my video on losing $3 million. With me not minting node monkeys, with me fading purple AI call, and with me not buying VPP, actually buying into VPP, but selling more VPP because I did not have conviction. It's quite interesting. I can't buy a bunch of VPP at this stage. I just don't want to for some reason, and it might be the issue as well. I think I would be doing way better if I would just sell all of the things that were not moving and I would just buy into VPP. I think I would be doing way better because VPP at least showed already that it would probably be moving, that it will probably be getting pushed by Alex Becker in the bull market as well, in PVE type of scenario. And people would be buying into VPP as well, especially people from the previous cycles that were buying VPP too. But the upside might be quite limited. I'm just holding it because I put 2K in and I would like to see how the whole thing would essentially play out. I can also say I lost $2 million on bread recently because I faded it at like 3-5 million market cap, and if I would be buying into bread, I would not be buying into like 10-15k. I would probably be buying into with larger volumes as well. And now I actually do understand why, because I did not know much about base chain. I did not do my research. I did not understand what is actually happening. I was neglecting people that made me money already. I was not understanding their logic. And I did not take time to actually research and to make sure that this is something worth investing and putting my money into. And I do find that most of the mistakes that are connected with regrets, in my case, they are usually connected with lack of conviction. And the only way you can actually get conviction is by doing more research. So I simply was not allocating time to do research that already costed me several $million at this stage, and will probably be costing much more because I do think that long-term bread might be doing quite well. I just don't see the asymmetric upside from these levels. Check out your system, understand why you didn't act, understand why you didn't make this money. Market always gives opportunity, but if you would be using the same system, you would be losing these opportunities moving forward as well. You need to understand why you lost. You need to understand why did you not win. You need to understand why you actually did not have conviction. Why people that are telling you to do something or are investing to something, why do they have conviction? They probably have conviction because they have more information, more skills, more experience. You can acquire all these things. You can acquire at least the same level of conviction, if not even more, by doing your research. It's very important. Conviction is the most important thing on the marketplace. And with me personally, I've seen many times I'm a bit late to trends, but at the same time, the first point of contact of me with new trend, it's still early. But often what I do, I don't focus much. I don't do enough research. Therefore, I let this opportunity to just run away from me. What I need to do in my case is when I'm exposed to a new trend, to something interesting by someone I know, but by someone who made me money already, is to actually research on the trend, actually understand what is happening, why it's actually might be interesting, and make a decision to act or not to act right away. I'm delaying things, I'm not focusing much attention on them, and I'm missing some of them, and I missed several of them already. I need to improve my system, and I'm working on this currently. Summing up the 5 points: protecting 20 to 50% downside, risking 1000% plus upside. Sell outperformance, buy into down performance. That's something that we all do, and we need to change that. Not thinking about second and third order of consequences, neglecting asymmetric upside and downside. When everyone knows about the token, when everyone screams about the token on Twitter, there might be asymmetric downside only to this thing. You need to understand who will be buying this token from you if you're buying it at these levels currently. If you think it's going to be retail in 6 to 8 months from now, yes, it might be happening, but it's not the best situation to be in, right? Point number 4, buy when dead, sell when alive and hyped. When everyone understands the thesis, when it's hyped already, it's already too late because your upside is limited. Last but not least, fuck the regrets, shut the fuck up and improve your system. Only things that are happening now are important. We need to use previous things and previous experience only to improve current processes and what is happening currently. You miss this several millions of dollars, alright, just move on. And I'm telling this to myself as well. Right boys, let's gamble. 192 members, let me show my screen. 192. I actually called something recently on my Discord, private Discord, which made money to people right away. So if you actually want to make some money on this market, feel free to join BitGet and become VIP member. You can also join without all this hassle with BitGet and just by paying 49 bucks, subscribing to Patreon page. I don't need your 49 bucks. I just want people to focus on the community and not just enter and forget about the whole thing. We need people to be focused and to share, to talk, and to provide value to each other as well. Winner number 1 is 104. First time winner, nice. 104 can be divided by 4. 21, 21 can be divided by 3 and 7. 168, almost 69, right? 68 right here. And I'm actually mentioning 69 because 69, 169 is 13 squared, right? Not the things that you thought about, right? Oh, I'm sorry. I think I missed reset. 168, this one. 168, I have a feeling can be divided by 4 as well. We get 42, then we have 2, and then we have 3 and 7 one more time again. 134. The last but not least, first time winner as well. Divided by 2, that's 67. 67. It's actually a simple number. It can only be divided by itself. Congrats to our winners. Guys, I know that I'm receiving feedback from some of you that you did not receive the funds already. I'm in the process. I will be sending them to you. Just a bit busy these days. And the interface on BitGet is not very convenient to be sending a lot of funds to a lot of people right away because it actually blocks you from sending a lot of transactions at the same time. But in time, I will complete all of it and don't worry. Think of it as like me providing you with better entries, right? Because what if I would send you funds on time and you would be putting into some token and we're seeing a correction currently, right? And I basically was able to provide you with better entries because of the fact I did not send the prices on time. Think about it. My friend, thank you very much for watching this video. We just crossed 10,000 subscribers in 3 months, which is pretty nice and pretty great. A lot of hard work and a lot of hard work moving forward as well. I'm improving the content, I'm improving the information, I'm improving myself, and I'm committed to provide you best crypto content on the marketplace. Actually, things that will be making you money as well and guidance in this market. Thank you very much. Again, let's move forward even stronger than we were before. Have a nice end of your weekend. Thank you.